Udayan, the biggest question in the minds of people watching at this time is, when does this sharp and dramatic fall in the Adani counters really stop? Everybody thought a couple of days ago when the FPO got subscribed that this would be the bottom and potentially things could stabilize here. That didn't happen. The stocks have continued to fall. How long does this go on for there?
Well, it's very difficult to say that, Rahul, because every day brings a new twist to the tale. Like yesterday when the budget was on and markets were trading, we were all looking at how badly the stocks were plunging, and then later in the evening the FPO news came out, the withdrawal, which would have surprised quite a few people. So, this is very much an evolving story. One thing one can say safely is that this is not getting over in a hurry. Now, the pace of the fall will get arrested at some point, because the last time I calculated this, the Adani Group had lost more than 40% of its overall market value. Now, that is a staggering amount of loss in just a few days' time. Now, this pace of fall cannot continue. At some point, because nobody is suggesting that Adani assets have no value and 100 will go to zero. So, we are not going to the ground immediately. So, at some point, we will see some kind of stemming in the pace of fall of the Adani Group stocks, and some part of it is visible in today's trading session as well. But I want to talk about the withdrawal of the FPO, because it's not a very usual occurrence in India.
Okay, so explain that. Explain that to our viewers.
And then
Udayan, why is it that the FPO was withdrawn late after the budget was delivered? Because the FPO had finally got subscribed, even though it seemed a bit shaky initially. Ultimately, Gautam Adani was able to pull it through after having achieved full subscription. What, according to you, is the rationale for having called that FPO back and for withdrawing it?
I think there are two ways to look at it. The charitable way to look at it, or if you're being generous to Mr. Adani, you would believe his explanation that he's taken the high moral ground, and therefore it's considered it the honorable thing to do by not exposing his new investors to a price risk straight away. But I think there is more to it than meets the eye. My suggestion would be that Mr. Adani, being a very shrewd observer and smart observer of the Indian market, would have figured that if this was to go through, then this would effectively close his doors to the Indian capital market forever, because people in the markets have long memories. If they got in on day one and day two they lost 25% of the money that they put up, they would never forget it, and therefore it would have been very difficult for the Adani Group to raise any capital ever again in the Indian market. So I think it's, even if you grant him that it was partly honorable in intent, I think you would also have to consider the fact that he was doing it to protect his own interests in the Indian capital market, particularly at a time when his global funding sources are going to dry up in the near future after what has happened with the Credit Suisse note yesterday. So I think it's to protect his future interest as much as to protect his shareholders from the fall.
We saw yesterday that Credit Suisse said they will not be accepting Adani bonds as collateral for their high net worth clients. We've seen Citibank do the same. Could that potentially be something that other financial institutes, banks start copying? And secondly, what impact does this have on Adani debt, which isn't with Credit Suisse or Citibank as much, but with the institutes that have the debt? Would they be looking at how strong their debt really is? Could there be a chance possibly of them wanting to call their debt back?
No, this is invariably going to have a knock-on effect, and I could see this coming even yesterday when the Credit Suisse note comes out. You see, Rahul, these international institutions all move in a herd. Even if you see the rating agencies, sometimes it's S&P first, then Moody's, then the rest. So if one big institution does it, then the other institutions will not be far behind in saying, okay, if they're not accepting that his bonds as collateral, then I will not do it as well, because later they will be held accountable if they did not respond in the same way as some of these other institutions do. So I fully expect in the days to come that there will be more financial institutions in the West who would do the same thing by saying that we are not going to treat Adani bonds as collateral. But the bigger question is, what happens to the debt that has been given to the Adani Group from Indian financial institutions? Because the group has debt of nearly 2 lakh crores. Out of that, 40% is given by the Indian banking system. And that's a staggering amount of 80,000 crores, out of which 23,000 crores is the State Bank of India. And it doesn't surprise me that SBI was the stock which fell 10% during trading hours yesterday at the first sign of the budget trouble. And Punjab National Bank is 7,000 crores, IndusInd Bank 1.5% nearly, if you put all of them together, all of their exposures together, nearly 1.5% of their loan book is Adani Group. So there are specific banks who have significant exposures, and there is a lot of concern on whether this will trigger off a fresh round of NPAs for the Indian banking system, which has just come out of cleaning its balance sheets. I think it's premature to panic, because the one thing that I will say about the Adani Group is that they have some assets on the ground, because they have ports, they have airports, they have power plants, and many of them are actually functioning high-quality assets. So, and not to speak of the cement plants of Ambuja, which they have acquired. So I don't think it's so easy to conclude that loans which have been given to them cannot be recovered, even in the direst sense, by liquidating some of these assets, though it has not come to that at all.